Now, I'm not going to talk about what happened yesterday, why the US market crashed, or what is happening in terms of local cues, which is IndusInd Bank is around down by 25%. We are not going deep into that. But what we will talk more specific is what might happen in the future, right? Now, why we are not talking ignoring history and we are looking at the future is because I don't want to bore you talking about the history, because you know what happened. Every Tom, Dick and Harry is talking about what happened to US market, so we don't have to go deep into that US market or IndusInd Bank. Now, before going into the market, whatever happens is out of control, whether it is in terms of US market or whether in terms of IndusInd Bank or whether in terms of Banknifty coming down by more than 1%. See, these are all not in our control, but what is in our control is that how we manage our portfolio, or in terms of an option trader, how we manage our trade. So that is very, very important, right? Now I'll show you our PNL. So this is our PNL. So it is at around a profit of around 42,000 or 43,000. Today morning it was in good profit, and the reason why it is slightly negative, MTM is slightly negative, is because you know what happened. Market gap down. When it gap down, it was in good profit. We saw a little retracement, so it's in little loss. MTM is in little loss. So we'll talk about that briefly. Before that, let me tell you, I've been telling this on a daily basis. There is a webinar on 30th of March, which is Sunday, 11 a.m. It is a Sunday, 11 a.m. So this webinar is about strategies, whatever strategies we are deploying. We have, as I told you, we have a almost zero loss strategy. I'm not going to say it is a zero loss strategy, almost zero loss strategy, which we have deployed. Not only us, even our people in our mentorship program have deployed. So we'll talk about that. On top of that, you can have access to our knowledge base, where we have 65 plus option strategies, plus access to our trading member group, right? So all this you will get. It's a lifetime charge. So if you want, you can join, for which the link is on the description below. Now, going to the markets, let's say when in terms of markets, so you can see there is a lot of things happening in the market. Now, what we told in yesterday's video is that the likelihood of market coming, not only in yesterday's video, even in day before yesterday video, we told that market is likely to come down. We have a strategy, we explain the strategy, and whatever you are seeing, the result is of that strategy, right? Now, as I told you, we don't have control of our history, but we do have control of our future, right? Now, what might happen is the main question, or is the $1 million question. Now, let us say, for example, as we have told that the market will come on the downside because there are lots of problem in terms of US market, reciprocal tax, then we have FIIs selling left, right and center. Almost every raise in the market is an opportunity for FIIs to sell the market. That is the only reason. That is why I am saying, that is why we told, don't sell this, don't go long in this market. If you go long in this market, you will be hurt, and that is exactly what happened. If you had gone long in this market, I'm sure you would have been in big loss. That is why we have been saying it time and again. Now, the market has come down. Now, if you had shorted the market also, you will be in loss. That's what happened today, right? Now, let's say, for example, if you had shorted the market today morning at around, let's say, 22,300. And one more thing I will tell specifically, in yesterday's video also I told that the likelihood of support is around 22,200 to around 22,300. Now you can see here the why we are saying that 22,200 and 22,300 is important is because that is where huge order block is there. That is where institutions have written huge orders. That is where they will have a liquidity. That is where they will manipulate you. Now, if you had, let's say, for hypothetically saying, let's say, for example, seeing at a big gap down around 200 or 250 points today morning, had you gone long not long. Had you gone short in this market, what would have happened is whatever you would have as an option buyer, if you had placed some put option, if you had bought some put option, immediately that option will that order will be a liquidity grab, because they have already placed an order at around 22,000 to 200 to 22,300. So your orders as an option buyer is void, right? Now let's assume if you are an option seller, had you sold some call option at around 22,200 or let's say 22,300, that also will be filled by the already pending order of huge HNIs, institutions, or let's say prop desk or whatsoever, right? So that's why we are saying don't go long when the market was on the higher side, and don't go short when the market is on the lower side. So that is what we will have to rectify, that is what we will have to see. Now if you go long in this market, it would be a I wouldn't say mistake, it would be a good opportunity. See, this market is a shorting market, so every rise in the market is being sold out. Now FIIs, if you can understand what is happening in terms of FIIs, for the last 5 months alone, there is a report that 94 lakh crores of Indian investors' money has been wiped out. And in terms of IndusInd Bank, today alone 24% is gone. You imagine how much of investors' money would have been gone, right? From around 950 levels, it has come to around 650 levels, and we don't know tomorrow what is going to happen. It might go to 500. Look at Banknifty, almost down by 1%, and IndusInd Bank, in spite of not having huge weightage, still Banknifty is not able to perform. Banknifty is dragging the market. So that is the only reason, that could be the reason why Nifty is also even if it tries to go on the higher side, it is not able to go. Right now, the thing here is, now what we have to do, that is the main question. Right now, what I will tell is, you should be obviously shorting this market. Of course, there is a disclaimer, you will have to do it at your own risk and responsibility. I am not saying do it now. Probably you should be shorting the market, and if you want to go long in this market, wait till the market touches around 22,200 or let's say 22,300. That is where the huge order block is, and that is where you will have to go long in this market. So in between, don't try to do some strategies or some strangles or straddle. It is not going to work, is what I am saying. Now this is the kind of volatility we are experiencing, and whether we like it or not, it is going to be worst going forward. And if you ask me why, there is lots of binary. Even tomorrow there is going to be data in terms of US market, and what if you ask me what is the data, we have core inflation rate month on month, core inflation rate year on year, inflation rate month on month, inflation rate year on year, and these are all the important proxy for US Federal Reserve to decide whether they are going to increase or decrease, or they are going to pause the interest rate. So that is very, very important data in terms of US market. Now apart from that, going into April, we have not we are in mid of March. If we go to April, if you can if you understand what is happening in terms of trade war, April is the month where Donald Trump is going to put a reciprocal tax on India. He is going to talk extensively about India. Now you have to understand, already market has come down more than 15%, let's say hypothetically around 17%. Let us say he comes out and talks about India. He is going to put a high tariff on India. You imagine how much downside it will come, is the main question here, right? So be careful. You will experience a lot of volatility going into April, or even going further. You will see lots of volatility. This market is not for light-hearted people. You will have to be very, very careful in this market. Volatility is very extremely high, and it is going to be it is going to cost you if you really don't know how to trade, or if you don't know what you have to do. That's why we have been saying time and again, don't do naked call option. We also told how a person lost more than 2 lakhs selling call options, or I think selling selling call options, naked call options. So there are lots. So you forget about making money. At least you will get margin benefits when you put a hedge, right? That is the main thing here, right? For at least for margin benefits, you just make sure you hedge your position. Without hedging, don't try to short this market. So don't try to sell call options, or don't try to sell put options in this market, right? So this is how the markets are. Let's say, for example, now if the market is going on the higher side, hypothetically speaking, since US futures are all in the green, and our market doesn't care about local cues, and our market doesn't care who goes where, no matter what happens, it reacts to global cues, or it reacts to US market. Now since US futures are going on the higher side, our market is also going on the higher side. Now let's say it is going to 22,700, or let's say it's already holding about 22,500. Let's say it is going to 22,700, or let's say it is crossing 22,700. That should be the best opportunity for you to short this market. And if it is going on the downside, let's say tomorrow still there is a see, US market, I will tell you, it was down by Dow Jones was down by more than 500 or 600 points, and still our market doesn't want to come below 22,000. If you had seen what happened to gift nifty, it really never came below 22,300, or not even 22,200. It never came below 22,300. So that is the amount of retail people, or manipulation is done in this market. So when the market comes below 22,000, around 22,000, I'm saying it again, 22,200 or 22,300, you should be long in this market. And if it touches 22,700, you should be shorting this market. And of course, in between, if you try to put any strategy, whether it is a straddle, strangle, or for that matter any strategy, it is likely not going to work, is what we believe, right? So be careful, trade carefully, be cautious. And there is no need to talk about Banknifty, because Banknifty is super volatile. If we can't trade Nifty, how do you think we are going to trade Banknifty, right? So that is the main problem here we are facing, right? So let's see how things pan out. I've already talked too much. So the conclusion here is, whatever I talked, we'll just go a recap of what we talked. Don't short this market. Try to be short the market at around 22,700, or let's say 22,800 levels, because that is where huge order is there by institutions or FIIs. Now, if it holds above 22,700, you can go long. Now, if you want to short the go long in the market, wait for the markets to touch till around 22,200 or 22,300, then go long in the market. If there is a huge volume and there is a big red candle, you can assume that that order block is void, and institutions are expecting the market to come on the downside. Either way, they will try to bring the market on the lower side. Every rise in this market is a selling opportunity, is what I would say, right? So I have talked too much. It's almost around 14 minutes. I'll end this video here. I'll see you in yet another video. Till then, take care. Bye.